Disney reported quarterly financial results on August 6, 2025, and investors are asking me if Disney stock is a buy after evaluating those latest results. I'll answer that question in this video. I'll share with you the big picture takeaways from the company's latest earnings results. I'll share with you my proprietary discounted cash flow model, which calculates a fair value for this stock, and I'll answer the question if I think this stock is a buy, hold, or sell. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Disney said that overall revenue increased by 2% in Q3 to 23.7 billion, and total operating income increased 8% to 4.6 billion. A couple of things are going on within Disney. Number one, the streaming segment is booming as people switch to that form of content consumption. The legacy cable segment that delivers its content through cable and satellite subscriptions is in decline as people prefer to stream content. So one side of the business is growing, the other side of the business is declining. Overall, content consumption is increasing because people can consume content more conveniently. Previously, 15 years ago, 10 years ago, well, more 15 years ago, people couldn't stream all that much content on their phones and devices, so they still were keeping some of their legacy subscriptions. Now, content providers are offering an abundance of streaming options. Internet speeds have improved, and people can watch content anywhere they take their phone. And so, overall, people are watching more content. Demand for content is increasing, and Disney has some of the best intellectual property, including properties like Star Wars and Marvel franchises that generate huge consumer demand. So, overall, that side of the business, content consumption is increasing, but there's some transitional headaches for Disney as it goes through switching consumers from that legacy consumption method to the streaming consumption method. And that's creating all of these kinds of difficulties for Disney to transition over. So Disney Plus and Hulu now have 183 million subscribers, which was an increase of 2.6 million from the previous quarter. Disney Plus alone increased by 1.8 million compared to the previous quarter. For the next quarter, Disney is forecasting a 10 million increase in Hulu subscriptions as a result of a deal with Chartered Communications, and I expect those subscribers will come at a lower average revenue per user, as has previously been the case when Disney made deals with other providers that it partners with to gain more exposure. So Disney Plus subscribers specifically, Disney expects a modest increase compared to the previous quarter. For the full year, the company expects adjusted EPS to increase by 18% from 2024. The CEO saying that the company is taking major steps forward in streaming with the upcoming launch of ESPN's DTC service, and they're just announced plans with the NFL. Additionally, they have more expansions underway around the world in their parks and experiences segment, including expansions in their theme parks and new cruise ships that are coming online. The cruise ship industry is booming ever since the economic reopening. People are making up for lost time when cruises were shut down to all customers. So while the accounting statements are discombobulated because of that transition of moving from the cable to streaming, their accounting profitability is experiencing all these different fluctuations. The cash flow from operations isn't going through those changes, right? Because that's just revenue, cash coming in, and they don't have to do those kinds of reassessments of intellectual property value and the long-term value of certain subscribers, all of those things that are happening within that transition of the method of delivery of its content. Cash flow from operations jumped by 41% in the most recent quarter to 3.7 billion, and in the 9 months which ended June 28th, cash flow from operations jumped by 61% to 13.6 billion. This company is generating very strong cash flow, and those numbers are improving meaningfully. Disney is trading at a market price of $113 a share, and I calculated its intrinsic value at $109 per share. Now, I like to have a margin of safety for the stocks that I'm considering, and Disney is well within the margin of safety here, given the proximity of the intrinsic value per share with the market price. So I would say Disney stock is fairly valued at the current market price when using my proprietary discounted cash flow valuation model, which, by the way, I've calculated a weighted average cost of capital of 11% for Disney. It has a beta of 1.56, and it's one of those cyclical companies that's not a very high risk company because of the decades in business and the built up customer relationships where Disney has delivered excellent value for those customers. I also like to look at valuation on a forward price to earnings basis, and looking at Disney's forward PE at 18.73, I would say it looks slightly undervalued according to this metric, given the company's history and given the projections for earnings and cash flow growth over the next 5 and 10 year periods. I would say it's slightly undervalued when measuring by the forward price to earnings. So when looking at it on my proprietary DCF, it looks fairly valued. When looking at it on a forward PE, it looks slightly undervalued. So since Disney is one of those excellent companies, been in business for decades, great intellectual property, excellent customer value proposition, great unit economics. Its properties generate strong profit margins and exciting new products in the pipeline. I would say at this fair value, after evaluating the earnings results, I would rate Disney stock as a buy. And I updated that recommendation on August 12th, 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.